the decline stage.
Mm-hmm.
Will it be correct for the management to reduce the quality so that they can sell at a lower price?
At the decline stage.
Yes.
Okay. Actually, at the decline stage, a lot of things can happen. What some smart producers do is they try to look at the product again and do some target costing and try to reduce the cost, just like you are explaining, and of course sell at a lower price. Okay, that's one way. And the second way, that of course, which is the commonest way, is they will try to improve on the product, try to give it a new look, okay, so that it can kind of look attractive. It will still be the same. Um, I don't know how many of you have kind of lived in the West. Somehow you will see, like, if you're somebody who goes to the supermarket a lot, you will see maybe, for example, the tea bag that you usually buy with a particular packaging. After some time, they will change the packaging. Okay, they will change the packaging because they kind of trying to rebrand the product to look attractive to the customers. Okay, because if it's same old packaging, people are just going to be to be fed up, and they may not want to buy those. So, but if you try to change the packaging, you try to change the taste a bit, then you kind of revive the product. So those are the various options that is possible at the decline stage. Okay. Thank you for that question. Any more? Okay, so we're going to move. I've already opened my Google Sheet spreadsheet. So if you're going to join me, try and open your own and follow, or if you want to watch, you can do that also. And if you have any issues, you can always go back to the video and watch the video and try to attempt the question yourself. Mind you, we're doing this on the computer, but during exams, you will not have any computer to practicalize it. So it is better after attending your class, when you go back, watch the videos and try to practicalize it. If you don't practicalize it, you may find it difficult. And it doesn't matter whether you practicalize it on paper or you practicalize it on the computer. If you practicalize it on the computer, it's the same as you practicalize it on the paper. And in fact, if you do it on the computer, it's going to give you more experience, because on the paper, the only difference is you have to use a calculator to add. So once you know how to go about it on the computer, it's also going to be easy to do it manually. Okay. So let's look at the second part. The second part says calculate the total cash flow expected from the production and sale of Fentigas and briefly comment on your calculation. So we're going to do accumulative cash flow, isn't it? So for WIC company, for CAMS company. So we're going to go here and let's say CAMS Limited. CAMS Limited. And the name of the statement is cash flow forecast. Cash flow forecast for the Fentiga. Okay. Cash flow forecast for the Fentiga. Right. So now we have to look at the way we're going to frame our question. We're going to frame our question based on periods. Okay, as you can see on the question, we have various periods, and those periods are very close to the stages in the product's life. And the periods are what? What are the periods as per the question?
1 to 10.
The periods are months. The periods are months. So our layout should also be exactly like that to allow us to calculate our cash flow. So in other words, we're going to do our layout based on our products life cycle as per the question. Okay, so we calculate we knock off the direct cost to arrive at our contribution, and our contribution will be equal to our cash flow. And if there are other cash inflows or outflows during the development stage, we add it. We include them in. Mr. Drame, I think I hope you are not on 2. Your mic is echoing. Okay, that's better. Fine. Okay, so let's start. So we will have, so the first column will be our details column. Okay, so I'm going to expand that. I'll just call it details, just to, sorry, get a typo. So details, and then the rest will be months. So we just come here and say months. And the months will be months 1 to 10, months 11 to 20, okay, months 21 to 30. You following me? As per the question, I'm not doing anything but copying from the question. Okay, months 21 to 30. And next is what? Next is? Mr. Drame, I think,
yes.
I hope you are not on 2 devices at the same time. Oh, the Drame.
Yes, I'm using a laptop, but let me mute it.
Yeah, it's echoing. So please mute your sound, yeah? Okay, right. So we're coming, right. So months, we have months 1 to 10, 11 to 20, 21 to 30, 31 to 70, and the next one is what?
71 to 80.
71 to 80. And 81 to 90, isn't it? 81
Yes,
to 90.
yes.
And we have 91 to 100.
To 100.
And last but not the least, 101 to 110. Good. So now let's try to format this a bit so that it can be able to fit. So I'm going to highlight from column C all the way to column J. First, I want to right align them. Okay, so I come here, I click on the alignment, then I click on right alignment. Okay, so that all of them are aligned to the right, because as accountants, we are highly organized and our numbers are always aligned to the right. Take note of that. Okay, so also the column width for each of them is too big. We don't need all this column width. Okay, the reason why some accountants find it difficult to produce reports visually or to produce reports on a printer is because they don't know how to manage their spreadsheet. Okay, so if you start typing here, okay, for most of the numbers is only going to be 2 digits. Okay, so why do you need all this space? Okay, so what we do is we reduce the column width for all the months. So how do we do that? We highlight all the columns at the same time, and then we at once we just click on any of them. Okay, click on any of them and try to drag it towards the left. So look at it, the way I drag it, if I drag it up to like this, all the ones that I have highlighted, even if it is thousands, is all going to follow the same pattern. Do you understand what I'm saying? So I drag it, I leave it, look at it. All of them follow the same size.
Sorry, sir. I'm a little bit lost from there. What you are doing?
Okay, I'll just do it again. What I'm trying to say is we want to reduce the column width for all these columns. Okay, first you have to highlight them. The column width means this is a column, okay, column C. So the width starts from here and it ends here. So this width is too long. What the numbers that we need here is going to be how to call it? We're going to express them in their thousands. Okay, so we need only 2-digit numbers here. Okay, in most cases. So we don't need all these column width. So we need to reduce the column width so that it becomes smaller. So to do that in multiple cells, in multiple columns, highlight all the columns that you want to reduce. And then after highlighting, just click on any of them. Like when I was doing it, I did it on this. So this time I can choose, I do it on here, just in between any of them. So I just click on this and then I try to drag it. If I drag it here, then that means my space is going to run from the left to where this blue line is. Okay, so I'm going to drag it and drop here. See, all of them will follow. Can you see?
Yes, I see it.
Oh, good. Okay, so we need to move. Right, so now these are the months. So we want to find the number of months in each of them. So these are just the month headings, but we want to find the number of months. So number of months. Okay. So in most cases, it's going to be 10, isn't it? So the first one will be 10. That's how to call it? 1 to 10 is 10 months. The second one also 10, isn't it? Third one, 10. 11 to 20, 10. 21 to 30, 10. But what about 31 to 70? How many months? How many months? 40 months. 40. Excellent. 71 to 80, the rest are 10, 10, isn't it? So the rest are 10, 10. So I'll just copy. Now come here. But I'm going to highlight all of them. The rest are all 10, 10. So I copy, highlight all of them, and I say paste. It's going to be pasted on all of them. Okay, so, right, so this is the number of months. Now, what we're going to calculate now is the sales demand on each of these periods. Okay, as far as we are concerned, this is period 1, this is period 2, period 3, period 4. So we know the number of months that are in each of the periods. And now if we want to find the number of sales unit that is made under each of the period, what are we going to do? What are we going to do? Okay, so simple, we go to the second table. The second table gives us the sales demand per month in each of the bands. Month 1 to 10, the sales demand per month is 190. Months 11 to 20 is 300, and so on and so forth. So what we're going to do is we can do the monthly demand. We can type the monthly demand here. It doesn't matter. We can still do it here. And or we can do it in a format, but it will be better to show it. Monthly demand. Okay. So what's the monthly demand for the first one? Are you with me, class? What's the monthly demand for the first one?
First one is 190.
190. Excellent.
190.
The second one?
300.
Okay. 850.
850,
1,500,
500, 900,
900,
700,
700,
450,
450,
300,
300. And then that's it. So 190, 300, 850, 1,500, 900, 700, 450, and 300. So these are the sales demand for each of the bands. So if we want to find the total sales demand for each of the bands, what do we do? The number of units for each of the bands. What do we do? The number of units, what do we do?
We multiply them.
We multiply them. Good. So we multiply them. So we say equals the number of months multiplied by the demand per month, and we just replicate. Okay, we have some that are in their thousands, so we can format to include a 1,000 separator. So I highlight all of them. I go to format, number, then I choose financial. Okay, and then I go and reduce the decimal place to 0 BP. Okay, so the number of sales demand that we require is this. So we make it bold. Okay, mind you, look at the way our numbers here have been formatted. So we can just go and undo this one. So we go format, number, we say automatic. Okay. So actually this should be 1 to 10. I don't know why it's trying to do a calculation on it. 1 to 10. Okay, so are we together? Okay, so we're going to move because time is not on our side. Some students will be joining next class and we have to complete this question. Right, so now we've known our sales demand under each of the periods. So let me just make the period also bold so that it can be clearly seen. Okay, so now what we're going to do is we're going to do our calculations in dollars. So if we want, we can do the dollar sign here so that we know everything else that's going to follow will be money, money, money. So the first thing that will appear in our cash flow statement will be what? What will be the first thing that will appear in our cash flow statement?
Selling price per unit.
It will be the selling price per unit because we want to find our contribution. So let's do our selling price per unit. So I'll just say SP unit because that is what is given in the question. So we don't have to complicate our life. The selling price per unit for each of the bands is what is given. So let's do that. And of course, the variable cost per unit is also given. So we knock them off and calculate our contribution per unit. And if we want to get our total contribution, we multiply it by the unit of sales. Okay, simple. So the selling price per unit for this first band, okay, we have been given on the first table. So it says cumulative sales per unit and the selling price, okay, dollar per unit in that band. So the first band is from sales unit 0 to 1,900. So is this not under that band?
Yes, yes.
It's under that band. So that means our selling price will be 120 for this band. So what about the next band? The next band, it says from 1,901, this is cumulatively from 1,901 to 4,900. If you look at this, cumulatively, it's what? 4,900. So it is within this band. So the selling price in this band will be 90. Okay, so we go to the next one. 4,901 cumulatively to 13,400. Okay, so when you add all these things together, is what? Is it not 13,400? So it's within that band, and the selling price per unit for that band is what? 60. Okay, we have to go a bit fast because to do justice to the people who are going to have another class. Okay, so we have to be a bit fast. In case you don't understand, you can replay the video and then you'll be able to understand it. Okay, so the next one will be 13,401 to 73,400. Okay, so let's do the cumulative. So when you highlight on this, it will give us 73,400. As you can see here at the bottom, it says sum 70,400. If you highlight on numbers, you can always look here. It will give you the sum. It can give you the average of the numbers. It can give you the minimum number. It can give you the maximum number. And it can tell you how many numbers, the count of the numbers. Okay, as you can see, we highlighted on 4 numbers. Okay, so that's the way you can do your quick calculation. So we look at it, 70,400, 70,000. So that means it's in that band. And what will be the selling price per unit for that band?
50.
50. Excellent. I'm happy that people are following. Okay, and then it says 73,400 and more. That's cumulatively. So 73,400 stops here. So anything that goes beyond the selling price per unit will be 40, and so on and so forth. So I'm going to copy this and paste it to the rest. 40, 40, 40. Okay, so that's the way we arrive at our selling price. Please, for those attending these other classes, just bear me out for 10 minutes, we'll be done, okay? I'm sorry about it, but we cannot leave it at this because it's a very, very crucial stage. So we've got our selling price per unit. So next, we have to calculate what? In order to arrive at our contribution, what should we calculate next?
We have to calculate our variable cost.
Variable cost. So I'll just say VC, which is variable cost per unit. So our variable cost per unit. Okay. So the variable cost per unit table is the last table at the bottom. So it says unit variable costs are expected to be as follows. The first 1,900 units, this is different from the way the sales unit have been, given. So this one is not cumulative, okay, but it's case by case. So it says the first 1,900, the variable cost per unit is what? 50. So is this not the first 1,900? Okay, is this not the first 1,900? So what's the variable cost per unit?
The variable cost per unit is 50.
50. Excellent. So, and then it says next 11,500 units. Next. So the next 11,500 happen to be these two numbers, these two bands. That is with 3 and 8,500. So all these are within the 11,500. Look at it. If you add them together, it gives you 11,500. Can you see? So these two bands, they will all have a variable cost per unit of 40. So you have 40 and 40. Can you see? 40 and 40. Okay, are you with me? Now, the next one you need to be careful. Then it says next 30,000 units. We have exhausted this, we have exhausted this, we have exhausted this one. Now it's telling us next 30,000 units. Do we have 30,000 units as the next?
No, we have 60.
No,
we
have 60,000. Okay, so now what are we going to do? Mind you, the next 30,000 units, if the first 30,000 which says next 30,000 is 25. The second one, the second 30,000 is 30. Okay, and what we have is 60. So what are we going to do?
And you separate
this 60. The first 30,000 will represent the first price, and the balance goes to the second one.
And the second, very good. Very good. So what we're going to do, we're going to split the 60,000 into two 30,000s. The first 30,000 will be at 25, and the second 30,000 will be at 30. So we're going to put 25 here and 30. That's what we're going to write, 25 and 30. Because this is the band, so we don't have any, we cannot average it as well. Okay, but when it comes to working, then that's when we'll see how it's gonna work. Okay, and then it says thereafter. So thereafter is 30. It's going to be 30 for the rest. So just replicate that so you can see. Okay, so now we have to calculate our contribution per unit. Okay, so our contribution per unit, how are we going to calculate our contribution per unit?
We will calculate it by subtracting the selling price, variable cost per unit from the selling price.
Okay, it's going to be the variable cost per unit from the selling price per unit. So we say equals C10 minus C11. Can we enter? Okay.
It's 17 hours.
So we replicate that. So that will come here, but we cannot put it here because we cannot use formula here. Why we cannot use formula here? Because this cell here has got both numbers and text. So a cell with both number and text is considered to be a text cell, and you cannot use a text cell in calculations. Okay, is that clear? Right, so how are we going to calculate the, how to call it, the contribution per unit for period 31 to 70?
I think we have to average it.
Average? No, if we average it, it will not be correct.
Minus 25 and then 50 minus 30. You have the two.
Good. So we have 50 minus 25 and 50 minus 30. So what will that answer be? Just like we have done variable cost per unit, so we'll still say 25 and 30, isn't it? 25 and 20, yeah? Is that correct? 50 minus 25 is 25. 50 minus 30 is 20. So it's 25 and 20. Is that correct?
Yes.
Yes.
Okay, good. 25, sorry, yeah, 20 and 25 or 25. No, which one do we start? Well, it's 25 first, yeah. So 25 minus 50, so it's 25 and 20, yeah? Good. So now the rest, we can just copy this formula that we have done here. So we say copy, then we highlight here and replicate. So we say paste. Okay, so we'll have 10, 10, 10 as the contribution per unit for each of them. So let's highlight, let's make bold our contribution per unit. Okay, so now we've got our contribution per unit. Now what do we want? We want our total contribution.
Sorry, Mr. Pofana.
So how are we going to calculate our total contribution? Yes.
Sorry, the 25 and the 20, this last one, I'm a little bit lost there, please.
No, we'll come to the, don't worry, you'll understand. The 25 and 30, you know, when we looked at the variable cost, the last table on the question tells us that the next 30 units, okay, after the 11,500, the variable cost per unit is 25. And another 30,000 units, the variable cost is 30. So we know that the next stage, there is no 30,000 here, but 60,000.
Yeah.
So what we have done is we have split this 60,000 into two, 30,000 and 30,000. So that means the next 30,000, the first one they're talking about relates to the first 30,000 which we have split. Okay, so we don't want to split here because we are using the same column. So that's why we say 25 for the first 30,000 and 30 for the next 30,000. I hope it's clear.
I get it.
Okay, so the same thing will be on the contribution per unit. The contribution per unit also, since the selling price per unit is 50, okay, so 50 minus 25 will be 25, and again 50 minus 30 will be 20.
I understand. Thank you.
Very good. I'm happy that you understand. So how are we going to calculate our total contribution now?
We multiply the unit contribution by the number of
We
units.
multiply the units by the unit contribution. Okay, so we say equals the number of units multiplied by the contribution per unit. Enter. And we replicate, but mind you, we can only stop here. And then we come copy and paste it here. This one, we need to do that on a formula. So how are we going to calculate for period 31 to 70? How are we going to calculate for period 31 to 70? Can someone help us? We need to do this fast because, well, we have only 5 minutes to complete this.
Yes, you can do equals to sum.
Okay, no, you have to explain how are we going to do it first before we put it.
Okay, now we are going to calculate 25 times 60 plus 20 times 60.
25 times 60 plus 20 times 60. Do you agree, class?
No, I think we
It's
should take
50,
30.
50 instead of 60.
No.
Yes.
25 times 30 and 20 times 30.
It's true. 25 times 30 and 30 times 20. True.
Yeah. Mind you, we have 2 things in here. This 60,000 has been broken into 2. The first 30,000 and the last 30,000.
Yeah, first
The
35.
first 30,000 is different from the last 30,000.
Yeah, the first 35,000
Yes.
is 20 by 25 and the last 30,000 by 20.
By 20. Excellent. So we're going to do a work in here. Okay, we say equals. So can someone give me the formula there? That is correct. That's the way we do it. We need to break it. First 30,000 multiplied by the contribution per unit of 25,000. We add it to the next 30,000 multiplied by the contribution per unit of 20. Okay, so what formula do we put here?
Sum.
Yasin, you've been very quiet today. Yasin, can you help us with the formula? Yasin? Hello, Yasin? Okay, can someone help quickly? We're going to end this class. Can someone help quickly?
You can say sum.
Okay, equals sum, bracket opens.
Bracket, yes, 25.
Sum. Why are we
Yes,
summing?
25.
Why
We're
are
going
we
to add 25
Okay.
because we are going to add 25 by 30
Okay.
plus
25
bracket close,
multiplied by 30.
you close your bracket, then open another bracket, plus, then you close, open another bracket.
Then you say plus. Open another bracket.
Yes, 20 by 30.
Okay. Right. This time around, we are expressing them fully. So why don't we do the full something? I think it will be easier to say that equals bracket opens. You don't have to put a sum there. The sum might be correct, but that will complicate your formula. So just say equals 30,000. Okay. Multiplied by, but there is no need to do a bracket at this initial stage. No, you can do it in the bracket, okay? So 30,000 multiplied by, bracket opens, 25 plus 20. So this is a lot easier. We've learned in our primary school maths, I don't know, they call it what, is it the assertive property or the commutative property or whatever? 30,000 multiplied by 25 plus 30,000 multiplied by 20 is the same as 30,000 multiplied by 25 plus 20. Isn't it?
Yes, you are right. Like factorization.
Okay. Yes, I know we did it. In our days, we used to do it in common entrance. So, so it's the same. So what you have said is right. We could do that. We could say 30,000 multiplied by 20 plus 30,000 multiplied by 25. You add the two, but mathematically that would be wrong. So you don't have to type 30,000. So twice. So 30,000 multiplied by 25 plus 20. So that will give you the answer straight away. Okay. So now we've got all this period, but one period that is missing. What period is that?
Yeah, that period.
What? There's a period that is missing. So let me just do the formatting of this whilst we are. Yes, so there is a period that is missing. I'm going to increase the font size and I'll make this white so that it can be white on blue background. I'm going to merge and center this. Then I'm going to make the text bold. I'm going to increase it to 14. And I'm going to make the text blue so that it looks beautiful. Good. So the months also, I'm going to center it over the months. It's going to be centered here. I need to be bold, and I'll increase the font size to 14, and it will be green. Okay. Is this not beautiful, class? Okay, so I was saying there is one more period that is missing. What's that period? We've got period 1 to 10, period 11 to 20, and so on and so on. But there's a period that is missing in the life cycle costing. If these were other costing techniques, we are fine. But we are talking about life cycle costing. So there is one period that is missing. There is one stage that is missing. Let me put it that way. What is that stage?
Is it the first stage? Is it the first stage?
What's the first stage? Don't say research and development. Research and development is part of the development stage. Just say development stage. In development stage, you can do R&D, you can do a lot of other things as well. So the stage is called the development stage. Yes. So the development stage is missing here, so we got to include it. So we come here, we insert, and push it 1. So I'm going to merge this again. So I'll start from here. Just gonna cut, paste. Okay. So I'm gonna merge this again so that it can fall nicely in between them. Okay. So this stage will be, I'll just call it month 0. I just call it month 0. You know, month 0 means before birth or development stage. So there are costs that happen in development stage. What are they? We need to put them here. We need to, they need to be here. What are they? What are the costs?
We have some costing. You have cost of the machine. Cost of the machine.
Huh?
The machine.
The cost of the machine, 175,000, and R&D cost. So we're going to add all of them here. So since they are negative contribution, we're going to put them in brackets. So we say equals minus, bracket opens, 175,000 plus 500,000. We close the bracket. So we have a total of minus 675,000. Okay, so we have minus 675,000. Okay, because this line is a contribution line, and month 0 we don't make any revenue, so it's a cost, which is the same as negative contribution minus. Is that clear, everyone? Okay, so now we've been asked to find the cumulative cash flow. So we're going to do our cumulative cash flow. So what do we mean by cumulative cash flow? What do we mean by cumulative cash flow? I'll make it bold. And I will make it blue because that's our end product. So what is a cumulative cash flow? Come on, we got to end this class. What is cumulative cash flow?
I think it's the total sales of the life cycle of the product.
Is this total? No, the total contribution. Okay, the total contribution, of course, over the life cycle of the product. But cumulatively, we need to do it period by period. Okay, so that's right. So that will be the cumulative, everything from month 0 to the last month. Okay, at the demise stage. So we need to do it cumulative. So if we want to do it cumulatively, period by period, what formula should we put on the first one? So in other words, at month 0, what will be the cumulative cash flow?
Minus 675,000.
So we say equals, we just carry that here. So cumulatively, it will be 675. But in month 1 to 10, what will be the cumulative cash flow?
Minus 675 plus 133.
Exactly. So we will say equals, okay, the previous cash flow plus the current cash flow, where it's negative, because when it is negative, we have already indicated it as a bracket. So to do a cumulative cash flow, we take the previous cash flow, the previous period's cash flow, plus the current period's cash flow. Okay, we'll always add because positive numbers will be positive and negative numbers will be in brackets. So if we add, there will be no issues. Okay, so cumulatively, we will have negative 542,000 in period 1 to 10. Yes? Yes, sir.
But I think you have to format the cell first before you can say if you add them, it will give you.
Yes. This is why we've already formatted. This is why we've already formatted this one. Look at it. That's why when I was adding the numbers here, I made them negative because they are cash outflows. They are negative numbers. So that's why I prefixed the numbers with a minus. Look at it here. Okay. So when you do that, that's a lot easier.
Okay, no, I thought you just put it in a bracket like that.
Yes, excellent. Yeah. So now that I got 1, then the rest I just replicate the formula. Easy. So I just come that, boom, everything is done for me. Okay. That's the end of the question. So month 0, what does this mean? Month 0. If we stop at month 0, then that means we are going to lose 675,000. Ooh, we bought a machinery. There was development cost, 675,000. No sales, nothing. So boom, pure loss. In month 1 to 10, okay, we incurred 675 at development stage, but we were able. These are some of the points that you're going to. I'm answering the B part of this thing, because you have to comment on your something. So that's what I'm explaining. Okay, the B part. So you have to do that on your own, but it's just analyzing this thing, the numbers you have calculated. Right. So in month 0 means development stage. Development stage. The company CAMS Limited will have spent 675,000. So if it stopped there, then that means they're going to lose 675,000 cash now. Okay. So in case they launch the project, okay, they launch the project, and in the launch stage, in the how to call it, introduction stage, they're going to make a profit. well, a contribution of 133,000. So cumulatively, that 133,000, you will still reduce your cash outflow. So it will reduce your cash outflow. So that's why now your cash outflows has reduced from 675 to 542. Okay. In the next period also, you're still reducing because you're only able to make 150 from here, 392 negative. So you're still 392 negative. And then up to, so all these things are what? Growth stage. So up to you still in losses cumulatively. Okay, 2222, because the previous balance is 392. When you knock off 170 from there, you're left with 222. But look at windfall now from period 31 to period 70. And we agreed, what is this period? Period 31 to period 70?
I think that one is
the maturity period.
That is maturity.
That's the maturity.
Now the product is declining.
Okay, this is the period whereby you've already earned your degree, you got married, and you started making children, you're enjoying, you're going on holiday, you have your big cars, big houses, and so on and so forth. Very nice period, yeah? So that's why during this period, look at the profit, look at the contribution, 1,350,000. Okay, but you have some carried forward cumulative negative of 222 that will reduce it to 1,128,000. Okay, but that's still huge. And then from now onwards, even though the profit is getting smaller and smaller, cumulatively you are well off. So that means by the end of the period, at the end of decline stage, cumulatively, this product, the Fentiga, will make 1,263,000. But you have to state that, however, this excludes the fixed cost. You know, we do not consider fixed cost here. Okay, so that will be your explanation for the numbers. Okay, so this brings us to the end of the class. This brings us to the end of the class. Any questions, please, before we wrap up? Any questions, please? Any questions, please? Are we together? I hope you understood the question, everybody. Is it well understood?
Yes, sir. So we understood. I just got lost with how the 675 comes about. Where the beginning of the contribution, where you say 175 plus 500,000. Is it coming from the notes?
Yes, from the first paragraph, the very first paragraph. You know, the very first paragraph was talking about the development stage, the cost that are incurred in the development stage. So that's where I got it. Yeah.
Okay, thank you.
As you can see on the formula here. Yeah?
Okay.
Any more? Any contribution? Any questions from anyone before we wrap up? Okay, so we could nicely, I'm going to show you another trick. We could nicely make this, just 1 second before you go, we could nicely make this into our borders. Okay, so we highlight. First, we want to put this in borders, all borders. So we highlight this, we click on borders. So we click on all borders. Okay, these lines are thicker. If you want a thinner line, we come here and then we select a thinner line. Okay. And if we want to put the whole thing on a thicker border, so we highlight the whole thing and we click on the border and then come here and then choose whether a thicker one or a double edge. So we can choose a double edge. In case we want it to be in color, let's say blue, we can just choose that. So once you choose, it will be in blue. Okay, and to make it a lot beautiful, you can off the grid lines. So you come to the view menu, you switch off the grid lines. Look at it. So it looks beautiful. Okay. So this is where we're going to end today's class. Thanks for coming. And for those who have class at 5 o'clock, today we didn't have many people leaving actually. I'm really sorry. I'm really sorry. Right. So thank you for having me. I see you next week, inshallah.